Hi there, very warm welcome. Good morning to all our viewers. This is Priyanka Uppal. You're watching Market Cafe on ET Now along with me, Shyansi. Shyansi, we again saw a big sell-off coming in Indian markets. Sensex plummeted around about 1,200 points. Nifty was down 360 points yesterday. Fed fear, that is what is looming on the market, and the kind of IT sell-off what we saw. Now, what lies ahead? Yesterday, it was Thanksgiving. US markets were short, but then we've seen, Shyansi, the traders have taken some risk off the table. Though we are on a winning week for US markets also, but Wednesday was a little
Absolutely,
somber
yes.
day.
So when you take a look at the week, really, you have a truncated week coming in. So when you take a look at Wednesday's move, largely, you did have the S&P 500 shedding just about 0.4%, Nasdaq Composite losing just about 0.6% as well. And you also have the Dow also mirroring the kind of moves that the S&P 500 saw as well. 0.3% downtick coming in there as well. But largely what is really important to watch out for is in terms of what we've really seen in terms of the notable week that we've seen both for Dow as well as the S&P 500 that rose to all-time highs. So that is largely that the factor that we were looking at in terms of price moves. The Dow is now tracking to end the week around 1% higher, while you do have the S&P 500 as well as the Nasdaq Composite that are up about 0.5% and 0.3% respectively. You also have Friday being a short trading session for the US as well. So that is also something to note, because these are largely the kind of moves that we're possibly going to be seeing at the end of the week for Wall Street as well. When you take a look at November trading, of course, this was defined by a post-election rally on the back of President-elect Donald Trump's victory. Also, that is something that is concluding this week, this particular post-election rally that I just talked about. And the Dow has, of course, climbed more than 7% in November, on track for its biggest monthly gain of 2024. S&P 500 as well as Nasdaq have also jumped more than 5%. So that's the kind of handover that we have in terms of the truncated week, and those are the kind of moves that we've seen, at least when it comes to November. But Priyanka, tell us about oil prices then.
Absolutely. In fact, if you look at the geopolitical tension, again, creating a fear among the global markets. It's not, let's just mention, Shyansi, dollar index, which is on we are near 106 now, and that's a big worry for emerging markets. And maybe the kind of fear we saw in Indian market was one reason was the surging dollar index also. But yes, talking about crude's oil price, that one edged lower in Asian trading on Thursday this morning. In fact, there was a surprise jump. What we saw in US gasoline stocks, that was ahead. And that's what, the oil prices started to react also. Now, there is worry about the demand in the top consumer of the motor fuel. The Brent crude futures, they fell by 4 cents. Now it is trading at $72.79 per barrel, whereas US crude, if you talk about that the crude futures were also a little bit lower at $68.71 per barrel.
Well, absolutely, that's the handover that we have coming in there. But OPEC Plus, of course, has also postponed its key meeting on oil production cuts to December 5th, citing scheduling conflicts among ministers as well. The group is set to decide on reviving supply with a potential 180,000 barrels per day increase in January. Now, falling crude prices as well as the risk of a market glut add to the high-stakes decision-making. So that is something that we're watching out for. And the OPEC Secretariat also said that the meeting was rescheduled as several ministers of member nations will be attending the Gulf Summit in Kuwait. So that is also something that we're looking at, Priyanka.
All right. Now let's take a quick look on the key events that needs to be tracked, not just in India, across the globe also. We talk about India. GDP data is on the tap from Indian markets. From UK, we have Bank of England policy MPC minutes, which will tell us the direction of Bank of England's next move now. In Eurozone, you have CPI figures. From China, we have the manufacturing as well as the non-manufacturing PMI data, which has to come in. Japan, a lot of economic data has to come in from Asian markets, especially from Japan. Their unemployment, Tokyo, CPI, industrial production, and even the retail sales is what is on tap for Japanese market. Back home, if you look at the corporate action, Jindal saw EGM, which is on tap, and focus is also on the Aston DM board, wherein the board is mulling preferential allotment of shares also.
Well, absolutely, and let's get you some more news and updates to kickstart the show then. And when you take a look at some more news and updates, China, of course, is set to restrict tungsten exports from December 1st, citing dual-use rules for military as well as civilian purposes. Tungsten, vital for weapons as well as semiconductors, is 80% controlled by China. However, global markets remain steady as South Korea's major tungsten mine also nears production, diversifying supply amid rising US-China tensions.
All right, in the meantime, Russia launched its second major strike on Ukraine's energy grid this month, leaving over 1 million without power. Now, President Vladimir Putin, he claimed the attack was retaliation for Ukrainian strikes with US supplied missiles, while President Zelensky called it a despicable escalation. Western leaders, including the President Biden himself, condemned the strikes as winter worsens the crisis now. Now, this one is claiming responsibility. Putin said that last night's cluster attack hit 17 targets. Let's listen.
Сегодня ночью нами был нанесен комплексный удар с применением 90 ракет подобных классов и 100 беспилотников. Поражено 17 целей. Это военные объекты, объекты оборонной промышленности и системы их обеспечения. Повторю еще раз, эти удары с нашей стороны состоялись также в ответ на непрекращающиеся удары по российской территории американскими ракетами «Атакамс». Как уже говорил неоднократно, с нашей стороны ответ всегда будет.
All right, keeping it going with global news and updates, then Israel and Hezbollah exchanged accusations of ceasefire violations just a day after the truce began. Israel reported airstrikes on Hezbollah rocket facility in southern Lebanon, while Hezbollah and the Lebanese army accused Israel of multiple breaches. The fragile US-France brokered ceasefire is set to last 60 days, and the aim, of course, is for lasting peace.
Okay, now moving on to UK. UK's Prime Minister pledged to cut migration with reforms to the points-based system now, urging businesses to train local workers. This follows data showing net migration hit a record 9 lakh in 2003. Starmer blamed the previous government's open border experiment and vote graft, not gimmicks, to address this issue. He added that they will introduce a point-based system also.
Alright, then that's the latest update as far as that is concerned. But moving on, then in Bangladesh, ISKCON Foundation had been called a religious fundamentalist group. The interim government, which came to power after the ouster of the then Prime Minister Sheikh Hasina, has said that it is examining ISKCON. This comes after protests against Hindus have escalated over the arrest of Hindu priest Chinmay Krishna Das as well. The Hindu community has been protesting and demanding for stronger laws to protect the community in the country. In fact, we caught up with Veena Sikri, who's the Indian former High Commissioner as well. Let's go across and listen in to what she then had to say.
Will certainly want stability in South Asia, and once again he will focus on no Islamism and no terrorism. I think these are going to be, and he is going to offer in exchange good trade relations. Trade can bring your economies up. Bangladesh has a lot to offer in terms of trade, but the economy is in a mess right now. Pakistan also can have something to offer in trade, but the economy is in a mess. So are they willing to get back to economic growth? Are they willing to give up Islamism, terrorism, and talk about regional integration? So I do think that President Trump will look at it, because South Asia is a very important region. And, even if you look at President Trump's interest in China, what he's going to talk about there, his interest in Quad, it all builds up to having a peaceful, democratic, and stable South Asia. This is very important for President Trump, and he's going to do his best to get it about.
All right, with this, we stay for a short break here. When we come back, we get you the cues from Asian market as well as some buzzing stocks over there. You don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates, and let's get you first the Asian market check going. Then, firstly, let's take a look at South Korea's Kospi, because that was the one that was leading losses just minutes from now, and currently you do have a lighter shade of red on your screens, downtick of just about 0.6% coming in for Kospi. You did have South Korea's industrial production that saw 2.3% increase on a year-on-year basis in October, marking a reversal from the 1.3% fall in September on your screens. Kospi down 0.6%. Previously was down about 1.4%, has pared some of those losses. But let's also take a quick look at Japan's Nikkei, because you did have the November headline inflation rate in Tokyo that came in at 2.6%, a rebound from the 1.8% that was seen in October as well. And core inflation, of course, rose to 2.2% compared with estimates of 2.1% on your screens. You have Japan's Nikkei that fell just about 0.7% after the release of the inflation data, currently is clutching on to some of those losses on your screens as well. So let's also take a quick look at Hong Kong's Hang Seng, as well as Shanghai and Australia's ASX. Firstly, Australia's ASX is the one that is holding on to a shade of red at this point. On your screens, downtick of just about 0.4% coming in for that one. But those are all the indices that are in red at this point, because you do have Hong Kong's Hang Seng that is up just about 0.2%, and Shanghai is also clutching on to a shade of green as we speak, 0.2% uptick coming in there as well. Back home, of course, we shut shop around the 23,900 levels, and currently we're penciling in a good sort of start coming in for us. A decent start is what we have in store, at least when it looks, at least in terms of what it looks like, in terms of what we're penciling in based on this handover, though. It is not a very strong handover that we have at hand, at least from Asia, Priyanka.
Yeah, trading mixed cues that we're getting, and the big cues coming in from Nikkei. This is majorly down. A lot of economic heavy week it is for Japan. Let's see how this one fares out. But moving on, let's get you the action we have lined up for you on the shows ahead. 9:20, we speak to Ashish Gupta, who's the CIO for Axis Mutual Fund, to understand what is the stance that DI is taking at this point in time. FI selling has again kicked off. We have seen a big sell-off coming in yesterday. On the order win, KEC International has won a sizable order. And then we speak to MD and CEO Mr. Vimal Kejriwal at 9:30. To understand the growth roadmap for Sonata Software, we would be joined by Jagannathan Chakravarti, CFO, at 9:40 from the organization. Whereas to understand the order pipeline for L&T's energy division, Subramanian Sharma, who's a whole-time director and president, at 9:50 speaks to us. And we gauge what is Nomura building on the strategy, what is the macro outlook and the FI strategy on India. Sonal Verma has to say. We speak to her at 10:20.
All right, we have a power-packed lineup for you right there, but time now to slip into news for the hearing impaired then.
Welcome back. You're watching Market Cafe. Let's move on to some key news. According to sources, ET Now has come to know that the Ministry of Civil Aviation held a key meet on rising airfare during the peak demand season. Now, though the ministry does not want to regulate the fares, it advised airlines to avoid taking undue advantage of demand during the peak season. Sameer Dikshit is here with more details on that. Sameer.
The Union Civil Aviation Ministry held an important review meeting on the issue of airfares this week. Sources have informed that the airfares on the domestic as well as on the international route that was reviewed, and especially focusing during the festive season period, that is starting with Onam until Chhath Puja, which is an important festival in North India, whereas Onam is one of the important festivals in South India. And it was observed by the ministry officials that the international route, majorly this southern South India based sectors which connect to the Gulf countries, these routes observed a spike in airfares majorly in the business class segment, and also when it comes to the domestic routes, then the important routes like Delhi Mumbai, Mumbai Chennai or Delhi Goa, these routes observed a spike in airfares. So the trend was reviewed by the ministry, but official sources have informed that as of now the government has no intent to regulate the airfares, but they are going to have a strong check, keep a strong eye on the airfares, and they are also looking to come up with certain steps to keep check and balance when it comes to the airfare aspect. It is also important to note that the review meeting on airfares is held at a time when the winter session of the parliament has just begun. And if you correctly remember, last parliamentary session, the opposition raised the question of airfares, and the minister, the aviation minister, Ram Mohan Naidu, had to answer, and then there was a bit of criticism of the government that they were unable to control the airfares. So this time the government has taken the review meeting, and they are looking to actually advise the key stakeholders that they do not take the undue advantage of the situation like the festive period, and they keep up check and balance when it comes to airfares.
All right, thanks Sameer for getting us that update from one ET Now exclusive to another. Then, according to ET Now sources, the government is planning to launch EPFO 3.0, which is likely to remove the 12% cap on employee contributions in PF, and employees could be given the option to contribute according to their savings, though the discussion is still at a very nascent stage. In fact, Prakash Priyadarshi filed this report earlier. Take a look.
Yes, it's an important development coming in, as we are learning from our sources that the government is planning mega EPFO revamp, and in its 3.0 version, a lot of employee-centric initiatives are being taken. Sources are informing that the EPFO is likely to remove the 12% cap on employee contribution in PF. Along with that, employees could be given the option to contribute according to their savings. And in fact, employees will be allowed to deposit any amount higher than threshold at any point of time. A very significant development coming in. However, the employer contribution will be fixed based on employees' salary. So there'll be no extra burden on the employer. But yes, employees could be given an option to contribute, to deposit in their provident fund account any amount they like to. And the idea behind is to encourage them to increase their savings. Along with that, the government is also planning to convert this amount into pension if employee if they on the employees' consent. That means if employees at any point of time, any employee wants their provident fund amount to be converted into pension, that could be allowed going forward. A very significant development coming in. In addition to that, sources are also confirming that the government is planning to provide some extra facility to the EPFO subscribers. They will be given a card like debit card, and they can withdraw amount from ATM at any point of time. However, the amount will not be more than 50% of their total deposit. And it is expected that the government will announce this initiative by March, April next year. And that is going to be mega reform when it comes to EPFO functioning. So these are the latest developments we are getting in. Back to you.
So, all right, there could be mega reforms as far as EPFO 3.0 is concerned. Prakash, stay with us. We have another story lined up. After a slow start to the first half of the financial year, the government is racing to expedite capital spending and has asked different ministries also to identify the critical infra projects that can be accelerated. Tell us more on this also.
Yes, we are learning from our sources that the government has asked various ministries to expedite spending on key infrastructure projects. We are given to understand that the key ministries such as railways, road transport and highways, telecom, coal, power and housing affairs have been instructed to escalate capital spending on key infrastructure projects going forward. Along with that, the government has also reviewed over 1,700 central sector infrastructure projects, and ministries have been told to identify key infrastructure projects that can boost capital spending going forward. In addition to that, sources are also telling us that the Finance Ministry has completed consultation with the ministries on budget estimates for FY26, and it has been observed that the government spending needs to increase by more than 45% during remaining months of FY25 to meet capital expenditure target, and therefore various ministries have been instructed to speed up their capital spending. Along with that, sources are also informing that a modest increase is likely in capital expenditure for FY26 as well.
All right, thanks Prakash for getting us that update. Then all eyes are on India's second quarter GDP. India's economic growth is likely to slow down to 6.5% in the September quarter. Now, this would be the slowest pace in 6 quarters. In fact, we have Gaurav joining in with more updates on what really is being penciled in. Gaurav?
Well, yes, we will get the final print on the GDP growth rate today. But when we talk about expectation now, experts are believing that we may see a slowdown for the third consecutive quarter. We may see this number coming out to 6.5%. Now, when we talk about the range of this projection, it is ranging between 6.2 to 6.8%, but the more bias is towards the 6.5% level. Now, what are the reasons what can lead this 6.5% growth is that we have already seen some of the lagging indicators for second quarter. So we have got heavy rainfall, which actually disrupted the mining activities. Other than that, when we talk about merchandise exports, they have also slowed down. When we talk about some of the challenges, we have already seen some of the margins of the companies coming down, and these challenges will offset some of the positive points like increase in capex, and that is the reason why experts believe that 6.5% growth is what we can see for second quarter of FY25. Now, let's not forget that RBI has projected that the 7% growth could be seen for the second quarter. So if the number comes up, it will be lower than RBI's expectation, and it will also be the third consecutive quarter where we will see the slowdown, and it will also be the 6th quarter where the growth will be at the lowest level. Other than that, when we talk about some of the Q2 highlights, we have already seen passenger vehicle sales have gone down from its 10 quarter level. When we talk about some two-wheeler sales also, we saw some slowdown here. And when we talk about some of the corporates like HUL, they have already shown some kind of slowdown in terms of the results, and that is the reason why consumer spending is also have gone down, is what we believe. And lastly, when we talk about some coming quarters, now experts believe that second half is going to be a portion where we may see some kind of growth coming up, but for now they are expecting 6.5% growth. If we pencil in this growth for the first half of FY25, we will see India growing at 6.6% level, although higher than the other peers that the country has, but again lower if we compare it with the historical data. So definitely watching out on how the GDP growth pans out, because let's also not forget that we also have MPC meeting lined up in December. So it will definitely have some kind of impact on MPC meet as well as rate cut as well. So definitely a key thing to watch out for is the GDP growth data today.
So there are signs that there could be some contraction in GDP, and this would be the third consecutive consecutive quarter that there could be a contraction. Thanks very much, Gaurav. But there were some improvement, what we saw in the high economic indicator for the month of October. Let's wait and watch how this data fares out. Moving on, insurance stocks in focus as IRDAI sources tell ET Now that there is no directive given on capping the bank assurance businesses yet. HDFC Life, SBI Life and Max Life Insurance shared a clarification calling the rumours inaccurate. Anurag Shah joins in with more details on this story.
Insurance regulator IRD has not issued any directive to insurance companies for capping up of their bank assurance business. As per the top IRDA sources, there is no plan and no directive issued from regulator to insurance companies to cap the business through bank assurance channel. As bank assurance is an important channel for life insurance companies, majority of their business come through the bank assurance channel, and as per FY24 data for listed companies, LIC's total business around 3.61% is through banca and alternative channel. For HDFC, of 65% of total APEs is through bank assurance business. Then SBI Life, 52% of new business premium is through bank insurance model, and for ICICI Pru it's around 29%. So we have seen that recently IRDA Chairman Debashish Panda, Finance Minister Nirmala Sitharaman has raised few concerns about mis-selling of insurance through bank insurance model, but as per IRDA top sources, there has been no directive issued to insurance companies for capping up of business through bank assurance channels.
Alright, thanks Anurag for that update coming in. In fact, let's also get the brokerage take on this as well, and Gaurav is standing by with just that. Gaurav, take it away.
Well, yes, as we know, ET Now exclusive sources have confirmed that there is no directive coming up from the bank assurance channel, and we also have some companies like HDFC Life, SBI Life confirming our story. And after that, we also have seen the brokerages coming up with their view. So first, let's talk about Morgan Stanley. What they're saying is that if the caps are implemented, this will be negative for AP growth. And other than that, they also believe that they will be waiting more for IRDAI as well as companies more announcements. And lastly, they also believe that the stocks are likely to remain under pressure because of the activities happening in the insurance segment. Other than that, we have also got Bernstein. They also believe that the regulatory scrutiny is actually rising in terms of life insurance. When we talk about some of the counters, Bernstein believe that this is actually negative for SBI Life, HDFC Life and Max Financials. And at the same time, they believe that LIC, ICICI Pru and PB Fintech can actually gain from these kind of announcements. Other than that, what they believe and why this belief is there is that they mention that the bank channel is a central distribution when it comes to life insurance segment, and private sector players are heavily dependent on the bank assurance, and that is the reason why they believe that SBI Life, HDFC Life may see some kind of negative impact. Lastly, they also believe that this will likely drag the stock price down. We also have Kotak Securities. What they believe is that this can actually lead to downgrade only if the stringent timelines are implemented on the what activities happening. They also believe that the private insurance stocks can actually look attractive after the correction that we have seen lately, and they also believe that the listed insurance company may be well placed to meet the trend, and that is the reason that they are not being very pessimistic here, but still some kind of pessimism coming up from Kotak Securities as well. So definitely watching out on all these companies on the back of the brokerage note that we have received in the morning on the back of all the activities happening in life insurance.
All right, thanks very much, Gaurav, for bringing all the details on this particular story and the brokerage notes. Thanks very much. We stay for a short break here. When we come back, we get you all the buzzing stocks as well as the other brokerage notes also. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates then. And it was a tumultuous November for the market, with the Nifty down for the second straight series. Total long positions also in the month were largely net negative throughout. In fact, Ansh is joining in with the highlights of what the series really looked like, and also talks about how the market has fared in December over the years. Ansh, over to you.
Well, that's right. November series was negative for Nifty because it was drawn by more than 1%, almost 300 points. But Nifty Bank outperformed Nifty. It was up by around 1%. Now, if we talk about FI position in index future, then at the start of the November series, it was just 22%. We have improved a bit from there. It has come up by to 33%. However, they remain net negative throughout the November series. The net position has improved from minus 1.5 lakh contract to 1.18 lakh contract. The total short has increased by 8%, but the total long has jumped by 83%, which shows that they are getting good positive in the market. Now, if you talk about rollover data, then Nifty's rollover was around 79%, which is more than the 3 series average of just 76%. Also, Nifty Bank average was more than the 3 series average. If you talk about high rollover stocks, then we are seeing Power Finance, Axis Bank and Granules in the list, whereas on rollover, we are seeing IDFC, ACC and GSW Steel. Now, coming to December series, we have collated data for last 5 years of this December series, and as per that, we are seeing that 2 out of 5 were positive with an average move of 2.4%, whereas Nifty Bank has also been positive because there it was positive for 3 out of 5 series and average move of 1.7%. So we may see a good Santa rally this December.
All right, we might see a good Santa rally with small cap index giving the maximum return to the tune of nearly 3% in the last 10 years. Ansha, thanks for bringing that interesting data, but do tell us about now FNO Gambit is also going to expand. There are 45 new stocks which are going to add. Tell us more details on that also.
Well, that's right. So let's start with the past first. SEBI had come up with this eligibility criteria for inclusion and exclusion of stocks from this derivative segment back in August. Now, as per that, to enter or re-enter the FNO segment, it must meet the criteria for 6 consecutive months. The criteria was first, maintaining average daily market cap and traded value among top 500 companies. Second was the stock must have an average median quarter sigma order size of at least 75 lakh. Third is MWPL value of around 1,500 crore rupees, whereas fourth is average daily delivery value of 35 crore. Now, as per this eligibility criteria, there are 45 stocks that have been added to the list, which is effective from today. And the notable names in this is Zomato, Jio Financial, Nykaa, DMart and Paytm. Now, with this, the total FNO share now has increased to 223. So now we have more stocks to trade in FNO.
Well, absolutely. Thanks, Ansh, for getting us an update right there. But let's also keep it going with stocks. And in fact, let's get you the list of stocks that you should then be watching out for bright and early this morning. In fact, we have Ria who's standing by with just that list. Ria?
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. We had a lot of fundraise activity happening. First up is KEI Industries. Now they have approved the closure of the rupees 2,000 crore QIP yesterday. They had allotted 52.6 lakh shares at an issue price of rupees 3,800 per share, which was a discount of just about 2% to the floor price of rupees 3,880 per equity share. And the allottees in this issue include the likes of ICICI Prudential Funds, Kotak Funds, Government Pension Fund Global as well, and even Motilal Oswal Mid Cap Fund. We also have Zomato, which has announced the closure of their rupees 8,500 crore QIP yesterday. They had approved an allocation of around 33.6 crore shares at an issue price of rupees 252.62 per share, which was a discount of around 5% to the floor price of rupees 265.91 per share. Let's also talk about Reliance Industries, now a wholly owned subsidiary of the company called Reliance Finance and Investments, a USA LLC, has entered into a stock purchase agreement with Wavetech Helium Incorporated, and they have subscribed to 21% stake of WHI for an aggregate consideration of $12 million. And this acquisition is being done to expand the company's exploration and production business in the low carbon solutions segment. We also have PCBL in focus. Now, the second and final phase of the 20,000 MTPA of the 40,000 MTPA specialty chemical capacity at their Mundra plant in Gujarat has been commissioned yesterday. And with this, the combined manufacturing capacity of the company now stands at 7.9 lakh MTPA. Lastly, we also have Suvain Pharma in focus. Now, they have received the shareholders' approval for the scheme of arrangement amongst Suvain Pharmaceuticals Limited and Cohance Life Sciences Limited. So keep your eye out on all of these stocks today.
Thanks very much, Riya. Quite many names appearing in QIP for KEI Industries also. Thanks for highlighting the rest of the stocks also. But moving on, financial and pharma will outperform the markets according to Vikas Khemani, who's the founder for Kalenian Asset Management. Listen in what exactly he had to say about these sectors that he's betting on.
Quite positive on the banking space. We think this last 6 to 8 months, banking as a sector probably has not done so well compared to broader market. So that can do very well. Pharma can do very well. CDMO space can do very well. To some sort of consumption name will do well. So again, you got to look at but broader category wise, I think financial and pharma is something I would say broadly should outperform broader markets. Even we are quite positive in the IT space as well, where we are we hold quite a bit of position.
Why do you like IT? Because these businesses are still growing at 7-8%. You can charitable and say 9-10%, but there are a lot of other sectors which offer better returns and perhaps higher growth.
Again, saying like I said, a sector might grow at 7-8%, but there are companies which are growing at 18-20%. Many of our companies, like eClerks to Science to LTTS to NewGen, all of them have grown superiorly well than industry. So you got to, again, like I said, that one is sector narrative, and second is to identify companies which are kind of growing faster within those narratives. And these are the great businesses, cash flow generative businesses, great superior ROEs, very highly moated businesses. So in fact, many of them trade cheaper than consumer names, where I think probably similar kind of matrices are there. So the way we look at it is that I think those businesses we want to continue to remain invested, and they are definitely growing faster than the consumer, many names which I just mentioned. So I think again, one is broader narrative, and secondly, within broader narrative, there is a detail. And actually, real money is made when you look beyond narratives and in the details and data.
Sure, you talked about financials looking good, but if I can ask you, Vikas, to narrow down your view a bit there, because of course there's very large right from insurance, NBFCs, PSU, private, even financialization of savings scheme with respect to brokerages and AMCs. What within the BFSI world are you liking?
Like private sector banks, we like public sector banks, especially right now, PSU banks, we think there's a good risk reward. We like insurances. We own life insurance specifically in our business. So again, these are the categories within insurance, both general and life, both under-penetrated category, both have, significant growth ahead of us. So these segments we like, and within that, of course, you have to identify companies, but some of the capital market oriented plays, I feel in a shorter term or medium term have kind of little bit overplayed. So you might see low return in that. But, banks and insurance is something where we can see from next 12 to 18 month perspective, good returns. Though structurally the whole basket is in good, but these I just mentioned from a medium term perspective, you could see some interplay of returns.
What are you staying away from, or what have you trimmed in the recent past?
Frankly, I think again, not a structural call from a trimming perspective. At a company level, we end up taking sort of calls wherever we think that things have played out. We bought Ola Electric on listing, and when it went to 130, all we had sold within 10 days time. So when we thought a lot of it was captured. So again, these are more kind of, I would say, tactical calls, but structurally we are not bearish on anything. If you ask me from our portfolio.
No, sorry. So I didn't get the Ola story right. Talk to me a bit more about that. So you bought it during the IPO phase, then you sold it off, and now in the correction, you did not buy it again, right? Or you bought it again?
I think we have not bought it because we didn't have cash. We deployed somewhere else. So obviously you have to look at the portfolio compulsions as well. So, but yeah, I mean, and it definitely became around IPO price. It is quite attractive and interesting play. I think risk reward favors. So we had our one cycle right, fortunately, though we didn't anticipate to do this so fast. But when something offers faster than what you expect, you better take it off. But yeah, it's a good franchise, and one should keep a watch on it.
Alright, then with that, completely out of time on this edition of Market Cafe on ET Now, from me, Shriyansi Singh, Priyanka Uppal, the show's producers, Sumashri, as well as the entire team that put this show together. Thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.